What is going on YouTube? It's Brendan from Market Makers. Have my best Hawaiian shirt on today. One of the commenters told me I look like a retired cop with the shaved head and the Hawaiian shirt. I guess I just need a cigar. It's funny because I said growing up, because I'm 44, Magnum PI in the 1980s was like my role model. Driving a Ferrari, living in Hawaii, always dating various models or whatever he was doing, solving mysteries and crimes. That was, I thought that was the best thing a young teenage preteen boy had to look forward to. But guys, this marketplace has been awesome. The title of this video is Radioactive Markets. It's referring to the economic poison seeping into the marketplace. We're talking about going into a global recession. By the way, this isn't me. This isn't Crypto Savvy saying this. This is the IMF, the World Bank. Everybody agrees there is a global recession overall coming. We have 40 countries with double-digit inflation. China may already be in a recession, the second largest single country economy in the world. We don't know because they don't really share their numbers. They're still in lockdown. The U.S. is all but guaranteed a recession. So if you're listening to these big banks and these analysts and CNBC, the permabulls that say, oh, well, this still leaves open a window for a soft landing. You guys know the numbers for listening to the channel. 9 times inflation above 5% in this country. All 9 times we have had a recession. Average drawdown for the S&P, fill in the blank, guys. You already know the number, minus 35%. S&P right now is 17% negative, which means at a minimum, we're doing another leg like this. And if we have some sort of financial crisis, you're getting that third leg. And I've given those targets. Watch my Wall Street Panics video. I go over those targets as well. But this is where we're at in the marketplace. There's some truth tellers in the marketplace like Jamie Dimon, who I've never been a fan of, but he's the one that said the economic hurricane. Everybody was making fun of him. A couple of the big banks recognize what's happening. When you go into recession, everything slows down. We had a big issued report yesterday from JP Morgan again, or 2 days ago. JP Morgan saying they predict millions of Americans are going to lose their jobs in a recession. Millions, not thousands. You've already seen Meta cut 11,000, Amazon cut 10,000. You're going to see these big numbers start rolling in. I have a family member that just got laid off. Actually, 2 family members, one's extended family that just got laid off. You're going to see this start accelerating as these companies realize they are not making as much money. Then they will move to cut costs. Part of cutting costs is laying people off. This all takes time. That 3-month, 10-year yield, once again, that was inverted, guys. That inversion has caught 11 of the last 12 recessions, actually predicted 11 of the last 12 recessions. And the only one that it didn't predict was during the rule of Reagan. President Reagan. So Reagan was a big supply side guy who was able to avoid a recession when we had a 3-month, 10-year invert. Because what? What did he do? He increased supply, deregulated marketplaces, cut taxes, made the overall operational functioning of the economy stronger through growth. We have the inverse Reagan right now, okay? We have the antidote to growth, which is President Corpse Biden, okay? Dark Brandon. That's who we have right now for the presidency. So what is he doing? He's talking about capping oil prices, more regulation. They're already talking about regulating crypto again, of course, because of the FTX debacle, which went to benefit his party to the tune of $50 million, by the way. So we have all these regulations they're proposing, the ESG regulations, all these things that make growth more, more difficult to happen in this environment. So when you look at the setup, 40 countries, double-digit inflation, and China in a recession, U.S. guaranteed a recession, the Eurozone, which if you take the countries as a whole, is the second largest economy. The Eurozone is predicted by mainstream media, okay, not Brendan, not Crypto Savvy, mainstream media, to have a severe recession / depression. So you cannot have the top 3 economies in the world have severe recessions / depressions and not see further market decline. I don't understand a bullish case for this scenario. I was talking to Craig, Crypto Savvy, yesterday, actually. We were talking for a while. I didn't know him before I came to crypto, and he was one of the only people that talked to me. A year ago when I came to crypto, I was just asking him about the space, what his thoughts were, which people were respected, which weren't, that type of stuff. And we were just joking about how we were both giving these targets out over a year ago for you long-term subs to this channel. We were talking about this as soon as we made our tops back in November. Craig's been giving these targets out a long time. By these targets, I mean sub 20K Bitcoin, sub 10K Bitcoin. And it's just funny to see the permabulls finally talking about it, right? So you guys have been getting leading market edge leading information from watching my channel, from watching Craig. I did a live stream with him, I think back in March. The title was called Market Savvy, if you want to see it. But we go over these same targets again. This is back in March, guys. So you get a lot of hate when you're bearish. But, you know, again, it's just understanding the macro market cycle that you're trading in. We'll do something again. A lot of you are requesting it, you know, doing another live stream type format for you guys. So we'll look at something again. Guys, this video is going to be brought to you by our two awesome sponsors, BITGET. I've been with them. I'm an OG on BITGET. Again, they're publishing their Merkle Tree Proof of Reserves, showing that everything is financially sound and backed, their reserves. That's going to be available on their website. The link to join BitGet to get our bonuses and perks, which include private tournaments that are only available on our link, that is in the video description. You can trade all the cryptos there, guys. And SimpleFX, where we trade these commodities, Forex, and equities, because that's a big part of my trading. That is my background. So let's go ahead and jump into this. So what do we got, guys? Bitcoin made a new low. What did we get to? 15.4 made a new low by about $100, and we're getting a little bit of rebound. Here's the weekly time frame. Okay, so I know this doesn't show you guys a lot. This is the weekly time frame. Now we're going to come down to this GAN fan level. It's an ascending gradient here. This is roughly 14K, could be 14.5, depends where you hit it. And then of course you're going to bounce when you hit it. Could we come back up to the next gradient? We could. That could be 17.5. Again, it depends where you land. We look at this from a Fibonacci perspective. Peak, trough, peak. This is a fib wave, and you can see we are hugging this, what fib is this? The 764, 16,083. You can see the body is above it, wick below it. One fib would be at 14.4, so that would kind of be my target there, lining up with that GAN gradient as well, 14.4-ish. And then, of course, you can see the 1618, 10,591, based off of the previous all-time high, market low, current all-time high, gave you that target back in November 2021, and the current Fibonacci wave projection from the smaller weekly time frame of 10,053. Now, is that the bottom? No. Guys, everything will be cheaper next year. Mike Wilson from Morgan Stanley, who's always on CNBC, has been pretty good this year. He actually got the Analyst of the Year award or whatever. He has this fire and ice narrative. He's predicting one more low in Q1, and then he thinks the market's going up. I just think that's a I'm not going to say asinine prediction. When the recession hits, guys, remember these things operate in lags. When the recession actually hits and millions of people lose their jobs, according to JP Morgan's new report, again, a couple of days ago came out, millions of Americans are going to lose their jobs. When that recession hits, I don't see the market making a low and then going up. I see the market reacting just like in '08, just like in .com, where you have big rallies, just like now, where we get these 15, 20% rallies, and then you get lower lows, okay? We will have a bottom. That bottom could easily come next year. I think that bottom may happen in September, October. Again, the 245 angles in the GAN calendar, March, September. The reason most crashes and most bottoms really kick off or bottom out in those 2 months, again, it's on the GAN calendar, the 45 angle. 45 angle, above it bullish, below it bearish. And guys, just understand the environment. With the recession, with trading, with the economics, you're going to have a lot of price decline in the assets that you follow. We've been talking about Tesla here. We've been talking about other things. Tesla's selling off hardcore, of course. Everything that has these increased PE values, they're all going to come back down to reality. And it's going to happen with crypto too. So that's the bottom line. When I talk to my cousins, my friends, and they say, hey, when should I buy? I don't want to trade anything. I tell everybody the same thing I tell you guys. In my opinion, and this is all opinion, none of this is financial advice, everything will be cheaper next year. Everything. So if you don't want to listen to TA about trade this wave, sell this top, everything will be cheaper next year. And you'll know it by watching this channel, because I'll keep you in tune when I actually do think we have a real bottom. Okay. So that's our numbers here on the weekly time frame. If we go ahead, let's check out the 10-year real quick. 10-year, you're looking at 3.766. It's a little bit depressed. You can see we had a double top that form, broke down. Now we're just trading in this range. And if you look at, again, it's just about putting pressure on the equity space, right? If you look at the DXY, we made our bottom down here. A lot of people saying, see, the dollar fell apart, bottomed out 105, and now it's back up at 107.4. You could be trading in this lower rung. It's going to depend on what the Fed does December 10th, if they're going to go 50 basis points, 75 basis points. And of course, it's not the Fed in a vacuum. You have central banks around the world raising rates, again, because we have 40 countries with double-digit inflation. So it depends what somebody else does versus what we do. It's all relative. Remember, the DXY is the US dollar measured against a basket of currencies. The largest currency in there is euros, by the way. So we got Bitcoin on the weekly. Let's look at Bitcoin on the daily. You can see we fell into our lower Wyckoff trading range. Now, on this downward wave projection, you lost the 16,000. Well, you're above it now. 16,058. You lost it on that bottom. You're slightly above it. Let's go ahead and zoom in some here. You guys can see this a little bit better without squinting. And this, again, is just, you just made a double top on the daily. Do you see this? So you have a double top here. Let me turn the magnet off so I can draw this a little bit cleaner. You have a double top that formed just like this, okay? So if you hold this Wyckoff line, maybe you can get some more volatility going back up here. The Fed minutes, by the way, are being published tomorrow. It's not a meeting. They're just publishing their minutes, and that is anticipated by me to be very hawkish because the economy is still way too hot for the Fed. So, you know, we could see some more downpool in the equity space potentially tomorrow, some sell-off. We'll see. So this is a double top that you have here. Now, remember, in Wyckoff, if you did have this double top start to break down, what you want to look for is these consistent lower highs and eventually maybe peaking out of here, coming back up, back testing. Maybe you back test the 618 and look for that pivot out, okay? And you get candle wicks here. This is how you can kind of gauge if price is going to break down. You can look at your momentum indicators, your MFI, your volume weighted RSI, your RSI, if that's what you prefer to use. This is what you want to watch for, okay? This breakdown, the pivot to the next level down here on the fib, 13.9, okay? Weekly time frame a little bit higher, 14, 14.2, all depends. But we'll see what we do here. We could end up just ranging, but you did make this bearish shape here on the daily time frame. If we look at the MFI, volume looks, you know, it's low. It's a lot of negligible volume bars, but your MFI itself, you're coming back up to the median line. You're still in a bearish trend. You may end up getting rejected here at the median line like you did several times. So you want to watch how price reacts. Again, this is a daily time frame. We're going to go to lower time frames. The volume momentum's dying off, as you can see, below the moving average. Volatility is starting to contract. It's still expanded, but it is starting to contract. The guys that watch this channel have been on our Discord for a long time, know that, you know, like I said, I trade Forex as a background for the last decade, but ATR is something I use a lot in Forex. And because the volume is tick volume, you know, people say it's 80% accurate. I don't want anything that's 80% accurate. A weapon, or when I'm putting money into something, 80% accuracy is not very good. Volatility is excellent though. Looking at ATR, I have this set up for 3 standard deviations, so you can see that you're still in this strong selling trend, right? And if you zoom this thing out in the daily time frame, you can really use ATR a lot to see where your trends are, and you can see. Let's see if we get the candles to stay colored here. You can see how this is pretty accurate when you start looking at there's a lot of ATR tools and things you can use, guys, but ATR is average true range. Wells developed it. One of his indicators he developed. He's developed several indicators that a lot of people use. I believe he also developed the RSI. So this is just something that shows a change. When you have a trending market sideways or making a top and spend some time up there, it starts to break down. You get 3 standard deviations, and the ATR is how I have this set up. You can see this just break down and it turns to selling, right? And you catch all this selling as well. Just like any indicator can give you false signals, but you are still in a strong downtrend, strong bearish trend, especially from a candlestick perspective, from a market perspective, trend perspective, and ATR. Looking at the 4-hour for Bitcoin, through this in Wyckoff, you can see what we did here, okay? So this is why it's good to look at smaller time frames, even if you trade on larger time frames like I do. Money flow on the 4-hour, again, below the median line. Volume looks decent here. This is volume momentum, right? So this shows selling and buying. This is participation in the marketplace. So volume looks decent here, but what you can see what you did in your Wyckoff, right? You got your base, this is your volatility range. You got your ceiling, retested your base here, and then you get the volatility in the range. And what happened? You fell through your base. You got this cut back up, right? So on the 4-hour time frame, again, you want to watch and see if this starts pulling back down, okay? If you start pulling back down and you do end up back testing, for instance, this actual Wyckoff line in this example, watch for that pivot out, okay? Because this is what you want to do. You back test, you get down thrust, you came back into the range. If you start failing to come into the range or just start making lower highs, because here's your high, here's your high, here's your high, you can go through here. If you just keep making a series of lower highs, watch for this to potentially fail and break down. Very important if you are trying to actively trade. Let's look at Ethereum. Ethereum, we have it here on the 4-hour. Let's go ahead and look at the daily first. I had too many charts open, so we're just going to use a couple time frames here. So Ethereum, we have this line, the 618. Well, let's go ahead and take a new projection here because you have a double top right here we can measure. So you see this double top here on the daily? Let's go ahead and measure this. I like to measure my double tops like this because you can see you got a breakdown off this double top, peak, trough, peak. And you have the 2.6... or the 4236 at 994, the 2618 at 1255, which you fell below. That's not very useful. I guess that's why I had it set up like this. Let's do a wave projection. We'll do it from this peak down to this trough, up to this peak, and that's what we just had. Okay, so you have your 150, your 233 are above you here on the daily time frame. Your 618's at 1153, which is giving you resistance. Obviously, your next fib down is 1030. Now let's go ahead and look at this on the 4-hour where we just were, and we'll do something different. Get rid of that. Still have that GAN fan going from the pandemic low. As you can see, you were riding it as support. And let's expand this, do this. Money flow is bearish, by the way. Go ahead and put this in a volatility range for you guys. See what we're looking at here. All right, so let's grab a ray. Use our base. Use our top. Okay, so this is exactly what we were talking about Bitcoin may do. So remember, what did Bitcoin do? Bitcoin came back up into its volatility range, right? It did something like that. Turn that magnet off. It did something like that. And now you want it to hold that range, whatever, wave around, break on the support, come back up, right? This is Ethereum's doing the opposite. Ethereum came back. It's back testing literally the Wyckoff base. You see that? So if Ethereum starts to fail here, doesn't get penetration, you get some candles and it starts doing this, that's your Livermore pivot potentially to the downside, especially if the market starts pulling down. So you start looking at these numbers, 1078, look at your indicators, right? Look at your momentum, look at everything that you guys, whatever you guys use, trend lines, your shapes, whatever, however you're trading. But this is something I would be looking at if Ethereum does not break back up above 1133 and find some support and get back into this volatility range. This is a 4-hour time frame. Watch for potentially Ethereum to turn down more. And of course, we had the FTX hacker selling and a bunch of different things you guys probably followed in the news. Below the median line here on money flow, may end up getting rejected here at the median line. Volume, momentum looks okay. It's starting to peter off some, but this price action you need to watch. Let's look at ADA. This was requested in the comments. Let's go ahead and measure this double top. We're on the daily here on ADA. Peak, trough, peak. 2618 would be at 28 cents. As you can see, it blew right through the 1618, okay? This was a very strong momentum here on this double top. So you have ADA. Let's go ahead and go to the smaller time frame because daily candles obviously take 6 of these candles to print. So let's see if we can find a volatility range here. All these charts are going to look similar, as you guys know that trade these marketplaces when you're looking at the altcoins. I mean, there's going to be differences, obviously, but they look similar as well. Go ahead and use this candle wick here as a base. And let's go up to our top. I mean, this top is not even getting close to tested, but you can see what's happening on ADA. Just you're defining a volatility range here in Wyckoff, right? And there's steps here in Wyckoff that you would do, but you could tighten this up a little bit too. But you can see you fell through your range here at 31 cents, right? And you're at 30 cents, or you're at spot 30. Which one's the number here? Yeah, okay, spot 39.78. So roughly you're right on the line right now. So really you're about 31 cents. You want to see this come back up into the range again, or you're going to have the same problem. You already fell out of the range. You could end up doing this. Okay. So this is what you want to watch for, is that Livermore pivot. And here's your 200, 233 on the 4-hour time frame. That would be a potential really good area to look at shorts at 36 cents. If for whatever reason you got some momentum to come back up here. But if you're just looking, when I always advocate when I short, I wait for pumps because I always want to short at extremes, okay? I want to short at peak resistance. You can always chase, you can breakout trade, trend trading it's called. I have a video on this in the room, how to trend trade using using the 5 and 21 on different time frames, looking at the candles, where to place your entry order, that type of thing. So you can trend trade this. If this does start breaking down, you go down the 1-hour time frame and watch it. But again, this is going to follow the macro, and the macro in crypto is going to be Bitcoin, right? So just be aware, ADA, Ethereum, very weak positions right now. If it was back up in here, more of a neutral position. This is a weak position, primed for potential more downturn if the market starts moving. Let's look at equities now, jumping over to the Russell. Russell on the weekly, nothing's changed. Obviously, we got some sell-off, got rejected at our 618 from the pandemic low on our Fibonacci fan. Weekly 50, rejection. And of course, the 200, 233s down around 1800 here on the weekly time frame. Actually, that may be the 300 because the Russell was really weak. Nope, that is the 200, 233. Let's go ahead and jump to the Russell on the daily. Talked about this trade. We shorted this in the room. I took this trade myself. Fibonacci fan, pandemic low, 200, 233, got sandwiched between them, shorted it. Nice movement here on the Russell, guys. And then we traded this on SimpleFX. Highly suggest you check that out if you want to trade futures. There are no spot buying on Simple. It is futures, doing massive volume with all the Forex exchanges, okay? 6 to 12 trillion a day, no liquidity issues in the Forex space. Huge marketplace. And this is a 5% move, guys. So with leverage, 20x leverage, 100% on your money. And this was an easy trade. I told you some trades are easy: bearish divergence, volume divergence, and of course, volume divergence on the run up, and we hit peak resistance. Again, easy trade. This could be forming some type of double top, maybe get a retest, come back down again. If so, we'll look to short it again. Let's jump over to, let's look at the Dow. Dow was moving up a little bit today. Again, outperformer, but people get excited about these moves. These moves are all in range, okay? This is just a very tight range the equities are in. The Dow is only 30 companies. You're above your 50 on the weekly, above your 618 from your all-time high. You can see you hit your 618 from the pandemic low almost to the dollar, guys. Fibonacci is fantastic. And of course, we have our triangle base for where that will go eventually. And this is part of what I'm talking about. I think the market's pretty much topped out. Could it go higher? The Santa Claus rally, it's outperformed. But I look at this on the daily. I got volume down left to right this whole run up, okay? Less participants paying higher prices. Broke key resistance, 200, 233, made a double top that you're able to reverse here and come up. And now you're just getting massive supply dumped on you every time you get in this range. So you have this little pump here today, 10 years down, dollars down a little bit, got this little pump here, but it's still in the same range, as well as this cluster of candles over here. So for a Santa Claus rally to really happen, I think the Dow upside is limited. It's not impossible, but I think it's limited. And at the most, just based off this wave projection, you'd be looking at 36. And I honestly don't see it getting there. I think the market's topped out. You got above this 618 Fibonacci fan, which you haven't been able to do this whole downtrend. And it looks to me you're building a distribution box in Wyckoff on the daily. Okay, because previously you get up here and you had resistance and you fell back down. Here you're trying to hold it. I don't think the economic indicators are going to allow it to be held. But again, CPI is December 10th, right? If CPI comes in lower, you could get one of those euphoric candles up, something like this, where it peters out and then falls back down. People say, see, that was the rally. So depends how you want to look at it. Objectively, markets look to me like they're topping out, okay? And if they're not completely topped already, limited upside potential. And you see that, this chart wants to reload. Let me move my photo out of the way. You see that on the S&P. S&P, money flow, bearish at the median line, most likely getting rejected. And if you look at this as a weekly time frame, again, the 618, S&P's been able to get above it, and then what does it do? It gets above it and falls back down. Got above it, supply dumped, lower high here in this tiny trend here on the weekly though, okay? And this is your 618. This next wave looks to me like you're breaking this triangle, the intersection of the 618s from the all-time high to the pandemic low, okay? This looks like you're going to be breaking back down. So could you have more upside here? Your weekly 50 is at 41.44. So yeah, you could have more upside to the weekly 50, but you haven't touched it in this downtrend here in recent trend. If you look at this on the daily, again, bearish divergence on your MFI, this whole rally up, less participation volume divergence on the actual pump itself up. Where is my volume? Boom. You can see the volume is all negligible candles. Average volume on this big pump candle wasn't even average volume. So again, to translate that for people that don't understand volume divergence, if you have fewer participants paying higher prices, you on the biggest pump candle on the S&P in 2.5 years, you didn't even get average daily volume in a 21-day trend. That should tell you how overbought that candle is, okay? Which is why you're building a distribution box, in my opinion, which is why you will reject it right here at the 233 with a single wick, and you haven't come back up yet to test it. So if you zoom this in, if price does want to come back up, to me what you're doing, we're going to turn the magnet off. To me what you're doing is you're just building a double top. There's your base. If this does come back up, you could get a retest there of the 233 or the 200 and then come back down. This to me looks like what you're doing, okay? So when I say the markets have limited upside, I'm specifically on the daily time frame referring to the 200, 233, which again, this is around 4,000, 4,050, okay? So on the weekly, 41.50, on the daily, 40.50. If you could flip this and come up to the weekly, that to me is your upside, okay? And that's only roughly, 100 points, depending how you look at it, 100, 150 points. And I don't see it yet. I don't see the momentum. I don't see it in the money flow. So again, Santa Claus rally, I think you're going to need a low CPI to even get this back up here, and definitely to get it up to that weekly level on the weekly 50, okay? Because you built your Wyckoff, you got your Livermore pivot out, and now it looks like you're building a distribution box where you could potentially be waving back down. Why are all my charts reloading? All right, so NASDAQ. Let me go ahead and move this over. NASDAQ on the weekly, NASDAQ being the ugliest because of big tech. We talk about it all the time. But again, weekly MFI is bearish. Volume, look at the wave volume here. This is selling, obviously, here. But look at the wave volume versus participation. You're actually negative in participation, okay? So you get the wave volume in buying. It's not just in selling. You get the wave volume in buying. You can see price moving in waves. You can see it so accurate here in our VROC. Again, this indicator in the MFI, the one above it, these are free gifts when you guys join the room for half off. You still get our free indicators that we have custom designed for our room from Fractal Trade 15. And then you have your wave volume here. And this is just low volume participation here on the weekly time frame. And we wicked almost to the dollar, or actually to the dollar, the 764 fan line here, okay? So we wicked that, got below the 200, 233, pumped back up. Look at the NASDAQ on the daily, got our Wyckoff volatility range. And this is classic Wyckoff, right? You look at this is beautiful. So you have your base, you have your ceiling, and you come down, you get your down thrust, you get your up thrust, lots of volatility here. You actually get a double top built here, fall back down to your 1-1 fan line, the 45 angle in Gann, and what happens? There's your 2.5 year pump candle. When you look at it on the volume participate, that pump candle again, below average volume, the largest candle price movement in 2.5 years, below average volume, okay, on a 21-day trend, and you have negative participation. Looks clearly like you're building a top. That could be your failure up here. Now, typically in a more bullish scenario, this would be the beginning of your Livermore pivot, right? Now what you want to see is it come back up and pivot out. You got to break this resistance, pivot out. And of course, your target on the NASDAQ, clear as day, 618 Fibonacci fan, your 200, 233, roughly 12.6. that quadrant right there, again, dream trade, because if it gets up here, guys, shorting it because it's going to be coming back down. Again, my opinion based on my TA in this marketplace, okay? So again, if you do pivot up here and you do swing back up, most likely, unless you get that Santa Claus rally, catalyst being a low CPI, you're doing this and you're making a big daily time frame double top, re-entering this range, okay? This is what's most likely going to happen if CPI comes in as expected or hot, for sure. If it comes in hot, you're definitely doing this. So pay attention to that. NASDAQ right now is at about, what, 11,584, so basically 11,6. So, or it is 11,6, 11,617. And so this is what you're looking at here on the NASDAQ. Again, below average volume, lower negative participation, money flow is not doing anything, right? I'm not really seeing divergences or anything here, but even on the money flow, you can see that you're potentially building that double top there. Go ahead and look at Stocks 50, because I have a short on Stocks 50. Posted this trade in the room. Stocks 50 on the weekly. You know, there's your pandemic low, there's your all-time high. And of course, we came down, have this nice double bottom pattern here. Wyckoff trading range on the weekly, right near the top of the trading range. Let's go ahead and look at the daily time frame. Daily time frame, you can see I have my fib wave projection. You can't see the 1618 because it happens to line up beautifully with the top of Wyckoff at 39.37, right? So what I'm looking at here, guys, same as I'm looking the way I analyze all my charts. Here's your big ride up. This is a big rally. So let's go ahead and look at this. And again, you can trade this on SimpleFX. Let's go from our base here all the way up to the top of this rally. Almost 22% move up, right? 22% move up. And what I'm looking at specifically is volume here on this rally. Negligible volume down left to right. No sigma values, no standard deviations away from normal volume. Green bars here are average volume. So you got average volume a couple of times on this right up. 4 bars total. Out of a 22% move, you got 4 bars of average volume. Volume divergence down left to right. Can't draw with those things there. Volume divergence down left to right. And when I look at my indicators to confirm this, when I'm looking at taking high probability trades, negative participation here in the volume momentum. MFI making a series of lower highs here, riding our EMA wave, but you did have volume, or you had MFI divergence as well between a couple of these peaks. So I'm looking at the totality of it, limited upside if there is more upside, basically kissing that 1618, judging by the participation here in the marketplace, judging by the supply being dumped. This to me looks like here on the daily time frame, very similar, but inside the Wyckoff range, you could easily be doing something like this, okay? If you do get back on top of it, forming a double top, that's if it doesn't just roll over at some point. Stocks 50 is 50 biggest European companies, kind of the equivalent to the Dow, even though it's priced much more similar, as you can see, 3,935 to the S&P. So this is what I'm looking at, and my targets on this for the downside, I had it here on the weekly. You can see your pandemic lows, and look where the Fibonacci wave takes you. 2386. Now, ironically, the S&P targets are roughly similar, right? Just if we get that second leg down, you're looking at 2,500 being long-term trend. And then we have 1841 if we do have the severe recession / depression and or financial crisis thrown in there. You're going down to 1841. And this is, very similar here setup that you see. Basically, again, like I told you, rule of thumb, everything going back down to the pandemic lows. So that's Stocks 50. Real quick, let's do some commodities. Silver. If you guys do trade this, again, you can trade this on Simple. You do trade this. This is daily time frame. You got retested and rejected from the 200, 233. You could see if this ends up making a double top here. You can zoom into the smaller time frames, look for entries as well. But this is going to go down if the markets go down, right? Which is inverse to common thought here, because this is an inflation hedge. I have silver, physical silver, and I do think commodity cryptos, by the way, is going to be the next big thing. We already have some gold-backed coins, and I think you're going to see it for other commodities too, which would be absolutely awesome. So I hope to ride that trend in the near future. So silver right now at 20.977. Again, that key resistance here was 21.42 right there at the 200. Almost got up to it, got rejected. So I'd like to see a little bit more of a power move. Come back up here, maybe get up here. I mean, ideally, if you can trade this, short this at 21.977 would be perfect for obvious reasons if you start building a top, because you have a beautiful, clean double top set up at that point. Looking at gold, guys. Gold, same thing. retested the base of the Wyckoff, got above the 233, never made it to the 200. Gold may end up making some type of disjointed double top here as well in the daily time frame. Could be a second lower high, maybe coming up to 233 or just rolling back over like that, in which case watch for potential entries. Gold right now at 1739. Recent support here at 1627 that you've utilized many times. And as I've told you, because a lot of people do enjoy trading gold and a lot of people own physical gold, if this wave continues and the markets do continue down, my revised target is 1345 based on a Fibonacci wave. Was previously 1425, but based on a new price action, 1345 for the 618. People think that's crazy. Like I said, guys, GFC, gold went down 34%. It is the first thing liquidated by the big banks. A lot of gold is paper traded. A lot of metals are paper traded. They have margin calls. They liquidate their commodities to get that funding freed up, okay? And this will happen again to gold, which is why I do believe it'll be coming down to 1345 as the markets start to crash. And I think that's everything. Oh, my Euro US dollar trade. This is something I had posted in the room. We got a really nice movement here. I don't know why TradingView decided to reload everything, but we got the 200, 233 up here. I had my Fibonacci fan. So this just was, again, high probability, multi-point confluence trade, okay? And for people that don't trade Forex, this is a big move. Big move, use big leverage in Forex. And this was a 250 pip move, I believe, where we got down to the base here at 2.5%, 258 pip move. So you look at that. This was an awesome trade. Again, multi-point confluence, guys, which you're always looking for. 1618, 200, 233, 618 Fibonacci fan from a recent high. This worked out beautifully. Get some volatility here. If the dollar does continue up, we're going to see some more movement in price. Hope you guys enjoyed this video. Another long video. You know, holiday week, I'm going to still get my video out Thursday. Maybe I'll do it a day early tomorrow, but most likely it'll just be Thursday again. And I hope everybody has a fantastic week with their family. For here in America and everybody else, happy trading and good night and good luck, everybody.